Hey, I'm Scott Cole, and just wanted to provide my weekly commentary for the U.S. stock market. And I have a chart here of the Dow Jones Industrial Average, and we had a pretty bad trading day on Friday after weaker than expected employment report. And I believe the markets are also focusing on the elections over in France, which indicate that they might be booting a more conservative candidate in favor of more socially liberal candidate, which suggests that they're going to fight the austerity measures that Europe is undergoing. But in the end, they'll probably have to follow what Germany's doing. Germany pretty much runs the show over there. So anyhow, here's the chart of the Dow, down 168. We had made a new high and even a new closing high for this bull move since the March 2009 bottom, just on Tuesday, I believe that was. Yes. And after that, the market has since traded down 3 days in a row, and then we had what I've described as a true selling day on Friday to close out the week. A true selling day is when all of the major market averages are down at least 1%. And in fact, the Dow was the strongest of them, down only about 1.25%. Now, the Dow chart still doesn't really look too bad right there. However, some of these other charts are looking more ominous. So here's the S&P 500. As you can see, the S&P did not make a new high for this bull move and is much closer to breaking the April lows than the Dow is. And the S&P was down 1.6% there. The NASDAQ looking even worse. The NASDAQ was down 2.25% and closed at 29.56. Its April low is 29.46. So the NASDAQ is only about 1/3% above its April low. Dow Jones Transports, basically sideways action going back to February, so no significant breakdowns there. And I should add that it was down only 1.07%. So that would be the one somewhat shining beacon in the recent price action. However, the transports are nowhere near their highs, even for this bull move since the March 2009 lows, which can be seen. This is the high since then at 56.27 there, 56.18 close, and we're 400 points below that. So Russell 2000. Pretty similar to the S&P chart. We actually did make a new high for the bull move back in March, but that high was not retested this time. And now we're trading much closer to the April lows. And so we've got some ominous price action going on in some of the major averages. So if we get a significant breakdown from here, that would suggest that the trend is being reaffirmed to the downside. I would add the Russell was down 1.8% on Friday. The bellwether Apple was down 16 points, or almost 3% on Friday. Closed at 565 and change. Its low is 555, so we're only We're less than 2% above that April low, and my moving averages are getting ready to cross to the downside. So this suggests Apple could break that support, and then 550 would be about the next level. And after that, there's really not a whole lot until you get down under 500 and then down to 425. So if you get a major drop in Apple, you're going to get, obviously the NASDAQ is going to follow suit, and in particular the NASDAQ 100, which is this chart here, as the which is more heavily laden with tech stocks. And if the tech index kind of breaks, then we're going to see some trouble to the downside. So we've got an important week ahead in the markets. They say sell in May and go away. That may hold true again. The economic data coming out recently has not been very positive, especially on the jobs front, and we're going to need to see some probably better economic data going forward to try and get this market going. Earnings season has been underway for a few weeks now, so I don't think that the earnings reports are going to have as near an impact on the market as what they had in the last couple of weeks. So there you go. My sense is that we should be very cautious. I know I've been stopped out of a couple of my positions recently, some false breakouts going on that have been reversed, and the trading environment has been quite a bit more difficult dating back to the end of March. So use some caution. I would suggest not to be over leveraged. If you are leveraged, probably should scale back on that and be prepared for a little bit of a down leg here. And we shall see you down the road in some more videos.